Good afternoon. Welcome to today's closing stream live. That's right, we're going live for the closing stream. We just got a Fed interest rate decision. It is kept even at the 5.5 as of right now. Going to hear some more from Jerome Powell in just a little bit, so we will figure that out in a moment. Now we have to see what the reaction is in the market. As of right now, we're seeing some upside. We really want to pay attention and wait for Jerome Powell to talk, though, before we really discuss too much about what's going on at this moment. Now, there has been a little change in tone, saying that policymakers noted that there has been further progress towards the 2% inflation objective. So that's a little bit different, although inflation remains somewhat elevated. Also, recent indicators suggest that economic activity has continued to expand at a solid pace. So we are seeing expansion in the economy. That is very important to understand, that they cannot cut the rates if everything is continuing to go up. Does the risk achieved its employment and inflation goals continue to move into better balance? So they're saying it's going in the right direction. So the fact that they're saying it's going in the right direction, it would make sense to see a slightly upward move. Now, we did notice when this does happen, we are getting volatility to drop off by more than 10%. So look for some kind of, if this is down by 10%, that means we have an 85% chance for a down day in the next 2 trading sessions. We do still get more data this week. One of those pieces of data I'm going to really pay attention to is Friday. The unemployment rate is something to really pay attention to. We have a PMI that looks like tomorrow that thing could tick up to 48.8 is what was being judged. But we also are seeing a forecast of 48.2. So last time it came in at 48.5. So that would be a slight tick up or down. You kind of have a mixed bag going on there with the estimates. Now, on Friday, I think this is the main thing to pay attention to. We have non-farm payrolls and unemployment. Remember, I always toot that horn. I always say unemployment is what you really want to pay attention to. Really, at the end of the day, something is going to happen and the Fed will have to react. That's more what is going to happen. So if you're expecting the Fed to just cut rates for no reason or raise rates for some reason or something like that, most of the time what you're going to find out is something will break in the system and then they will cut the rate. So judging today as of a how could things start to crash or something like that, would it crash based on what they just said? Not necessarily at this point. No, not necessarily at this point. Now, actually, at this point, you would say they're keeping things the same. And what have we noticed as things have been kept the same? Well, we have been seeing that market tick up. So I would really pay attention to that going forward. We're going to listen to Jerome Powell. We're not going to try to read too much into it. Let me pull that up for you real quick, and let's get started with this. Let's look for Jerome Powell in live. Let's see. CNBC is usually pretty decent.
Considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Gina Smilek from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation.
I did see that, Robert.
If so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding.
Microsoft has
specifically
confirmed
to
a
one or
30-minute
two
divergence.
Data releases. The question
minutes
will
ago.
be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
I've said what I'm willing to give away,
Nick Timmer,
even though I
Wall
know
Street
something.
Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market, too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions. And that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and That's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market,
PCC sitting at 0.97. Dollar dropping rapidly all of a sudden.
For out of the inflation
looks like
numbers
potential for a squeeze if those put ratio
So
stays there.
we have growth isn't one of our three.
We'll
we have
out.
two mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those two things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say, again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a
AMD catching a bounce at the monthly expected move as of right now.
So those two things are working together, and we're factoring those both into our policy.
See if it holds.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of I don't think of it that way. I think of it as we're actually in a good place here. We're balancing these two risks of go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve Leisman, CNBC. Mr. Chairman, back in March you talked about cutting rates as a process, and in June you talked about the idea that, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant movement in the labor market. And, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this.
We'll get to the VIX in a
rates,
moment.
A year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress in the labor market. As I think, unemployment was in the mid threes. So it's a different economy, and I think it's time. It's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve.
Yeah, it's
what we're thinking about all the time
government
is
jobs
how do we
pumping
keep
numbers.
this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most rate, you would think in a base case that policy rates would move down from here, but I don't want to try to give specific, forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel.
The economy is uncertain.
Hi, Chair Powell with Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
TLT hitting the upside
Actually,
weekly
what we're
expected
seeing now is a
move.
little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable
Put call
rate.
ratio just increased.
This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report and, frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate
IWM
seasonal
is breaking
adjustments.
out.
If that's what it
crossing
is,
through resistance as of
then
right
that
now.
actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game, and that's why we look at 12 months. We look at 12 months because that takes all
AMC
that out.
is getting
all
above
those
the
effects out.
200
12-month now is
day
a
moving average.
2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably down to 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
Mara dropped initially, bottomed out, went straight back up.
We've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer-Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year, and the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September. It isn't going to be one data read or even two. It's going to be the totality of the data,
30-minute chart,
all of the data, and not just and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be
Oil's
the assessment
going
that
nuts.
we do. Of course, we'll all look carefully at the employment report, but so much other data coming in, and so much happening between now and the September meeting, and we'll make a judgment.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call. But this is how we're making it. But in terms of today, your question about today, we did have a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point.
GameStop may turn up on a 2-hour chart
to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney. Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation, rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing, a normalization there. But wage increases are still at a high level.
Congrats,
Unemployment
Robert.
is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market, and we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think.
Just so you're aware of the SOM rule, by the way, real quickly, I'm going to pull this over to here. The SOM rule is taking the lowest point in the last 12 months, right? So we look back, let's say 3 months, 3 months, 3 months, right, in this area. And so you would say 3.66. You'd say we are at that SOM rule almost right now. Just so you're aware, I just wanted to clear that up for you. It is about 0.5. It's when you're above the lowest 3-month reading within the last 12 months by about 0.5 or higher. And we are pretty much at that point right now. That's why they are bringing it up.
In the face of admittedly very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So
that's why I pay attention to unemployment.
To be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg.
Dollar
there seems to be
continues
quite
to
a difference
tank.
between what
Volatility
anecdotal data are
tanking.
telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data.
And we have hit
So
power
I
hour.
do take that seriously.
Watch Microsoft
and
trying to
the
confirm an
Facebook is
hourly
great.
divergence now.
What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter, so it's just hard to measure economic activity. There are it's just difficult to do. So I look at both. But I wouldn't say
SPY is pulling back like this, but dollar's still dropping as of right now. I'll
Uniformly
watch
downbeat.
it.
It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators.
The timing is everything, Mark.
Commentary. But we don't change anything in our approach.
Dollar still dropping.
To address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So it's
good job, Donald.
Anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
I sold mine this morning, Donald.
Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. We basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. We're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous
dollar still
vote
dropping
on an
even
interest
further
rate move, in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences.
If we get a good earnings, we can
and,
squeeze.
We
have a
talk
PCC pretty high.
a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. No one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents.
Microsoft confirming a divergence on the hourly chart as of right now by the monthly expected move.
We've felt more united.
See if that confirms by end of day.
Under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Jean. Hello, Jean Young with M&I Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
Yields dropping like a rock.
I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Yields dropping like a rock, but TLT is hitting a weekly expected move. We'll see if they start to get a little bounce.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today.
2 hour divergence on the yields, so we'll see.
I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this. And there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy, and so
Netflix triple divergence on the 2 hour.
In the minutes, we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think
dollar
that,
dropping fast,
we're a
faster.
consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say, some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question. That is the case. That
he just hinted he could cut rates next month. If data looks good, we get data tomorrow and Friday.
We think that the time it's approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Not only does Microsoft have the hourly divergence, watch for end of day, 2 hour divergence.
Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment. As I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to
most likely
cool
leverage,
off
I
anymore
assume.
for us
Don
to get
can tell you.
The inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment.
Mine's not lagging. You
low.
can put it down to
The
720.
data overall
Refresh.
show a strong labor market, so that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Greg.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Go to Jeff for the last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things. the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
All right. Looks like he's done. Okay, so just some things that I was paying attention to while this was going on. I just want you to be aware the market is dropping here, but the dollar is not responding, okay? The market is pulling down a tiny bit. Oh, sorry, that's the wrong thing. The market is pulling down a tiny bit here. The dollar is not responding how you'd expect. Now, volatility can turn up. We can see a pullback if they need to go grab liquidity, but we want to keep a close eye on this dollar. The reason we want to keep a close eye on it is because if this daily rolls over, you do have structure to actually break down. Yeah, you do. You actually do have structure to break down. You see the slanted head and shoulders in here for the dollar. So unless this is going to quickly make a little divergence, you see this? Unless it's going to quickly do that, and we see something bad in the next like 2 trading sessions or 3 trading sessions, that's something I'll be paying attention to. But as it pulls back, we want to look for volatility, see if that is crossing over the daily. It hasn't yet. So let's just pay attention to that. We want to wait for any kind of rejection. As of right now, 30-minute starting to turn up here. And one thing I was also noticing was Mara earnings is coming up. Bitcoin actually curling down here on this 30-minute MACD. Okay, curling down on this 30-minute MACD. So I would really pay attention to that, see if that's able to turn back up, because that will kind of give you a hint into Mara just a little bit here. Mara giving you some nice divergence at the lows, but if that crosses down, it means negativity. Now, as we go forward, one thing I was paying attention to, Microsoft confirming a 30-minute divergence with that little green bar there, now trying to confirm on the hourly, and you can see that there. And then one thing is tricky here, if this is able to confirm that, well, you do have that 2-hour divergence down here as well. So you do have that on the MACD and RSI at the same time. So we have some stocks that look like they could go up maybe, and we'll pay attention to that. But for now, it looks like this move is overall real. I don't necessarily see rigged behavior at this moment. So we'll keep our eye on the dollar, see if that starts to rise, right? Rise as the stock market rises, or as the market falls, see if that dollar drops even more, telling you the insiders are buying. A couple other things to go over here with Tesla is one that I wanted you to look at, because it is hovering right at that weekly expected move. So if it's able to break through, we can see a solid move higher, because that weekly expected move is sitting right at that wick. Right at this wick is that weekly expected move. If we are able to build up in front of that and pop higher, you can see almost like cup and handle, almost like just a little formation here. So we can end up grabbing that to go higher. But from what he was overall saying, not a lot has changed. I was very surprised that he was it was like he was hesitant to say it, but he was saying, oh yeah, if we get data, we could cut come August. So, and just to reiterate, as he brought up the SOM rule, real quick on the unemployment rate, as we do get that data on Friday, the SOM rule it's relatively simple. It just says, hey, find the lowest point in the last, is this a monthly or is this a 3-month? Yeah, this is a monthly. Okay, so as we come down, we want to go back and go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this would be 3.5. So the unrate says that a recession signal, one of the earliest ones. This is why I pay attention to unemployment, by the way, not necessarily the yields as much. unemployment can give you the hint before it happens. Well, you'll notice that, boom, we are up towards 4.1. So the rule says if it is above this number down here, this 3.5 by 0.5 or more, then that is a signal that a recession is coming. And we are at that right now. We've been at it for a couple of months. So we're paying attention to that. But for the most part, you would just say, we need to pay attention to Friday. Friday could be huge. So I'm really looking for if volatility actually ends the day, which monthly volatility curling up this month. So we could see some fireworks very, very soon. We really have to follow these signals closely. If volatility over here on the right side of your screen is up by more than 10% or is down by more than 10% today, you actually have an 85% chance in the next 2 trading sessions for a down day in the market, and that would be with that unemployment rate. So that is something to pay attention to. I think Microsoft will see it. Now, we just have to pay attention to the signals for the most part. If you're going to see that massive squeeze, I saw you guys were kind of talking back and forth about, hey, that we're going to see a rigged all-time high kind of move. Well, the signal for that will be this volatility being able to turn down. I believe if this turns down and we don't get some kind of reaction from the 200, right? This could turn down, react from the 200 in a couple of days, and boom, that thing goes off to the races. But if this starts to close below the 200, that's when you really say, oh yeah, we're squeezing. And the thing is, you kind of have the recipe for a squeeze. As we go over to the PCC, we see that during that whole speech, we saw more puts go into the market, which can be more fuel for them to use to squeeze those puts. They can give you some kind of short squeeze with that. That's what we were talking about a little bit. Hopefully you guys could hear that while we were talking, or while he was talking. Now, TLT, I wanted to talk about this real quick. If this is going to see those rates really come down, IWM seeing a good move there. Well, this right here is the weekly expected move. I'm just going to tell you that this right here is the weekly expected move for TLT. It can react from this. Remember, this is still traded. It just might affect those yields a little bit as it pulls back, as we see a little bounce. Now, as we go over to the yields, you don't want to read too much into the technicals with the yields. Mainly, you want to look at like weekly charts and things like that, daily charts, weekly charts, monthly charts. We can see that there is a 2-hour divergence down here at the lows, and we get data tomorrow. We're about to run into that point of 4.062. Okay, we used this point in the past. We broke through this point in the past. We used it as resistance in the past. We broke through, and then bam, we go to the upside, use it as support. So I like that level as of right now, but pretty crazy going forward, isn't it, for that 10-year yield to be at 4.08. So I would there's a lot to pay attention to. We're going to go over some stuff in tonight's video, but we'll still be here watching that last 30 minutes as I assume we're going to see some volume come back in here. You're seeing that first initial sell-off give you a pretty big amount of volume there for the end of the day here. We really haven't had a terrible amount of volume all day. Actually, let's go into a 30-minute and see if it's actually increasing right now. As that starts to drop, we could experience some kind of pullback, and we talked about this hitting this level. Really, I wanted to see if that would do it a little earlier before he talked, come down into this area, grab some liquidity in here, and then actually head higher. So at this point, we do have a slightly overbought reading. So we'll look into this. If we make that move to that weekly, and then all we have to do is say, is there divergence here? Is that actually reversing, or are we turning back up, creating that overall structure? So there's a lot to pay attention to. I get it. Days like this are crazy because you have earnings, you have data, you have, Jerome Powell talking, and then after hours you have earnings, and then tomorrow we'll get PMI, and then the next day we'll get unemployment and non-farm payrolls. So we have a lot going on. And yes, Bitcoin is overall dumping. Not the best sign for Mara at this point, but Bitcoin is dropping here. And that is something to pay attention to. 30-minute close to that center line. So we'll pay attention if that is able to fully get some real negativity, because that 2-hour is beat up. It could just be a flash move like this, and then we see that divergence. But if that's just turning over in negative territory, you weren't oversold here by any means. So Tesla could be, or I'm sorry, not Tesla, Bitcoin could be increasing that and going to test 63.4K. Now, remember, this can happen for a while before the market actually starts to catch up. Okay, so right now you just have to pay attention to what's going on in front of you. Well, we saw a great bounce. the 30-minute got overbought. So if they are going to send the market lower to grab some liquidity, it would be right in this level. We may even react to that right now. We may end the day like this, give people that bearishness, and then just see a gap up tomorrow. Okay, so we'll pay attention. We could see that pull down to the center line and curl back up. Remember, this is still pretty damn positive. So just pay attention. Right now, the positive trend is there. We have flipped back into a positive trend. This is not like in the past where this has sent us negative. This is not like right here where we sent negative. It could be a time where you're higher up, so you could base out after a little pullback. So we'll pay attention to that for you. Now, the dollar, remember, the market is dropping right now, but is the dollar seriously rising? No. So we're not necessarily seeing that dollar rise as the market drops. So I'd really pay attention to that towards the end of the day. What do you think about Crocs? Oh, Crocs. Crocs here, not the best setup in the world, I would say. You know, as far as the trade goes, maybe we need to look at a different time frame. I'm sorry, let me look at a 2-hour for you. So the 2-hour giving you that solid divergence, but no real divergence on the RSI. You don't need it all the time at the same time. It's still something to pay attention to. Boom, that divergence curls up, and we're off to the races. Now, at this moment, you're probably, let's look at an hourly, see how that looks. You're not even that overbought or anything like that. On the 30-minute, you are slightly getting to overbought, but this could be a moment where you turn down, turn back up, in my opinion, just because you are pretty up there on that MACD. So if this gets down by the center line, that would be fantastic. Earnings around the corner, though, be careful with it. That is always a 50-50 flip. Technicals can be thrown out the window a lot of the time, unless you're seeing like all those signals at the same time, giving you a strong probability. Even in those times, I downsize my positions with earnings. So just be cautious around any kind of earnings. Now, one cool thing was IWM seeing a major pop and then a major drop right away. So this could be a retest of the breakout area. We'll pay attention to it for the most part. You guys can keep me updated on that. But now the dollar's starting to creep up just a tiny bit. So the SPY is dropping, but that dollar not really rising to the point where you would say, hey, this is really affecting that dollar at this point, or the dollar isn't really affecting the SPY either way. Could you please check? I mean, the Dow was overall dropping, I believe, right? So we actually did come up into the top of the channel. Look at that. We came up into the top of the channel. Now, do we have reversal signals here? No, not necessarily. But do you really need them at this point? Do you need them, or is this going to be your lower high? The Dow is really telling us something here. Maybe we should be cautious for something bad that could happen, which is kind of convincing me, like, hey, I've made pretty good money for the last couple of days. Why risk all of that based on something like super simple? And now we want to really pay attention to Microsoft. Remember, Microsoft really dropped with those earnings, and we did have a point where, what's her name? Someone did bring it up, which is very good to bring up. Nancy Pelosi actually buying NVIDIA and selling Microsoft. So I thought that that was very interesting going into the rest of the week. We are going to mitigate risk here. I think that's a big thing for now. I'm going to take away any potential calls that I was taking just in case. I'm not going to let them even. I just think it's too risky with the amount of data we're going to get over the next 2 days. I'd rather wait till the signals are more clear, wait till these things are really confirming. Yes, Microsoft can see a good move if it curls up on this 2 hour. But we have a lot of things coming out over the next couple of days, so I'm not convinced to stay in anything at this point. So I'm going to manage my risk on pretty much all of my trades across the board, zero it out, Just say, hey, I had a great week. Let me not ruin it by over trading. Let me get out of those. Just take the good week. Look what next week has in store for us. Hey, Nazim, thank you so much for the $3. Really appreciate it. Thank you so much. Why has everything dropped suddenly? Well, one thing would be, it could be just a point where the end of the day, it could be the end of the day, and these guys maybe just want to take profit at a good level as we come up towards the gap fill. Would you pull out of the Qs? Well, I just think the Qs have that chance to pull back. It doesn't mean something good can't happen, right? It just means to me, is the best trade right here even on the 30-minute? Well, it's not on the 30-minute. Is it on the 2-hour? 2-hour still looks good. You can keep going higher, right? The daily scale looks like that thing wants to turn up. It's getting above these areas here, right? But is this going to pull back tomorrow? That's kind of what I'm overall thinking. Is it going to pull back just in the morning, and then maybe by the afternoon we see a good move? Maybe the unemployment rate, maybe non-farm payrolls, or just good earnings. People might be distracted by the good earnings. We'll see. We have news. Iran to attack Israel. Love this channel and the people here. I'm learning and having fun, starting to make some money. Can't complain. Congratulations, Nazim. Everyone looks like, you know, I'm glad that we're seeing a lot of people come out and say they were successful in their trades. I think we've seen a few people come out and say that, and I think that's awesome. Sadek, I'm going to look at Meta for you real quick. So the funny part about Meta is right before the earnings, we are consolidating sideways. So it really is kind of like we're gearing up to higher. That's what it would really look like here. But the only problem is, hey, earnings, okay? Earnings is just that. It's a 50-50 flip. All right, you're kind of in an area where maybe a little edge to the bulls, and thank you again, Nazim, for the $3, but a little bit of an edge to the bulls as that MACD and RSI are both positive. So that is something to pay attention to. But I want you to just look at this for a second and tell me that this can't be a flag, right? Just tell me that this can't be an overall flag. Because right now we're seeing this type of action here. We have this kind of flagging. So it really is a matter of, are the earnings going to be good or bad? And is the reaction to earnings going to be good or bad? That's what I overall think at this point. So it's a tough one. It's a tough one. I'm not going to play any more earnings. I already played PayPal, and after that I'm like, whew, that's all I need to do. Thoughts on Apple? So Apple doing some interesting stuff too, doing that consolidative move. Now, if you're part of the Patreon, this might make sense. This actually might make sense. It makes more sense, okay, as you get to, you know, to where you're learning on this channel, and then you go, okay, now I'm learning some stuff here. Now I've taken a course. Ooh, maybe I want to get those ranges. Once you get to the point where you get those ranges, if you've watched this channel for a while, you'll know that there is a monthly expected move right here. There is a monthly expected, let me just double check it real quick, but I'm pretty sure, and the dollar dropping off one more time. Okay, dollar dropping off again here. So I would really be paying attention to that. But for Apple, you have a monthly expected move upside right above you, right on that, towards that wick, okay? Right here is about that monthly expected move. So since today is the end of the month, it makes total sense to want to end right here, okay? It doesn't want to break through yet, okay? So maybe when we get those new monthly expected moves, we can start to head up. We'll see, but we're going to give those out later tonight. Apple has earnings Thursday after hours. Okay. Now, one thing I wanted to mention about the memers out there, we have AMC showing you a bunch of flat divergences over in this area, so we'll pay attention to that. Now, the other side of that coin is if that 30-minute can remain positive just for a little bit longer, you might have the daily scale be able to turn up here. So I'd watch out for those memers next week. Because if this can close in any way above the 200, that could trigger some good price action. You notice we always wick out above the 200. Well, we take that back. We start to close above some key levels here. Remember those unexpected areas. That's 588 on your screen right here. And yeah, that's where you really want to start to pay attention if that daily can curl up. Yeah, let's go look at your Clove trade real quick. That looks like fun, man. I'm super happy for you. That's so awesome. Now, in this area, we want to look. See this structure right here, right away on the daily? I can see, is there a 2-hour divergence? You do have 2 hour that looks like it wants to pull back. Now, Clove, I don't know if this has something going on with it down in these areas. I don't know if this is forced down in any way. So you can pay attention to the shorter time frames to see that. I would just really pay attention if that 2 hour crosses. Doesn't mean it has to be like all said and done. It's still pretty up there, but it can go negative with a few 2 hour bars down. Tom Lee, very bullish on the Russell. Yes, IWM as well. Seeing that really break out and then wick back down, but the 2 hour was able to cross here. So a positive move can be there. We'll pay attention to it. As far as it goes, the daily still turned up. We could see that pullback. We'll have to pay attention to what's going on, especially with this 30-minute chart, because that was a solid move. Now we're getting almost a retest, and we'll see if we can bounce higher. But as of right now, the SPY starting to trickle back up. We're seeing that dollar still drop down. So nothing about this seems rigged to me. Now, just because it doesn't seem rigged doesn't mean that price can't go crazy in the morning, because we do get some more earnings and we do get more data in the morning. Yeah, he's right more often. I think someone's in his ear. I think someone's overall telling him what's going on. Genuinely, that's what I think. Because no one can just look at charts and be that right. No one can just look at like a daily chart. He's probably not even looking at charts. He can't just look at a daily chart and be like, oh yeah, this thing, the SPY is going to 520 or something like that. It's just very, very unlikely that that is a genuine thing. It's more likely he has some kind of info. Yeah, oil was great. Oil, it was just moving. And this is great because this is exactly what you want to see. You see, I think it was a 4 hour chart, wasn't it? We see the 4 hour confirm that move higher on this bar, and we're just going. So as of right now, we want to check because that's a strong move. Daily scale is going to be turning, and we'll see, because that is taking back the 200. So we actually could see oil going nuts. So as those yields are dropping off, as they are saying they are potentially going to cut, you're seeing oil get a big, big reaction even before that news came out. Well, if he thinks inflation will drop like a rock, that's not a good thing. Like, I'm just saying. Oh God, that's not a good thing. That's just all I'm saying. Because if inflation is going to drop like a rock, what does that mean necessarily? Does it mean it's going to drop down to 2% like a rock, or it's going to start to drop down below 2% like a rock? If it drops down below 2%, you're going through a deflationary period. They very well could. They very well could. But as far as it goes, Mara, Bitcoin's starting to drop down, so that is not a good sign for things like Mara. The daily scale for Bitcoin looks like it's about to drop down a pretty good amount. So if that can cross over, right? This hasn't crossed over yet. But the good part is you had a little, I think, yeah, it was a what? 4 hour maybe? Yeah, a bunch of little 4 hour divergences in here. But the main one to pay attention to is the elongate, right? We talked about this too. Remember when we drew this line a few days ago? We talked about, hey, look at this taper. Now, if it's going to possibly drop down, it's not going to catch up to that. It's just going to fall flat. And then we'll look in here for some reversal signals. We get the flat divergence. We get the flat divergence. We start to fall down. So now you're in consolidative mode. I would really look for these lows of these wicks. That's 63.8, 63.4K. 20 minutes left. We could see some crazy stuff towards the end of the day. But as of right now, the dollar, very important to pay attention to. That thing is still dropping. Now down even more, negative 0.43. So is the SPY popping with that? That's what we really have to see here. Is the SPY as well popping? It is, so this does make sense at this point. Oh yeah, and someone did mention gold. I did take a peek at that. Was looking at gold for a brief moment here. Look at that move from gold. So, I'm just saying, if you're talking about a reaction that kind of says, hey, inflation actually might go a little bit nuts, and therefore people are really hedging towards gold, they're really worried about those rate cuts, I think. And gold could really start to catch a bid here as that dollar drops off dramatically. So right now, we don't need any kind of consolidation here to drop down. We're just going. Now we're running into a wall, so we'll see what happens with that going forward. Where do you see Meta long term? As far as Meta goes, well, as far as earnings go, it's a 50-50 flip. As far as long term, we can look at a daily scale. We can see this has been beat up for a long time. It would make sense for us to squeeze as we are seeing a pretty damn high PCC ratio there. So that would tell me, hey, we have the chance for a bounce, but it's all dependent on the earnings. If earnings are good and we could take this back, we could head all the way back up to these levels, and then we'll have to see if there's weakness in this overall move over the next few weeks. So I would say there's a little bit of probabilities for this to head up just based on how everything's being talked about, how everything looks. But this could just be a flash up and then bad unemployment rate. So we're going to pay attention very, very closely to Meta. But earnings, I'm not going to play earnings in any way. You guys know this is a 50-50 flip. You don't know what they are going to say. So if you are planning on playing any earnings forever, for the whole time you are trading, if you're ever planning on playing earnings, I would highly encourage you to watch my previous video on YouTube that I put out last night as I talked about how I treat earnings. And maybe it'll help you gain a better understanding of like how earnings is a 50-50 flip. But if you want to play it, there's some things you need to take into consideration. I actually don't know fully, Amog. Everyone on YouTube is drawing lines all over after volatility. Volatility itself, I mean, it's not doing anything crazy. We got to see if that turns up. But for the most part, if this turns down, you're most likely seeing that short squeeze right away. And that could happen as soon as tomorrow. And then you just want to see if there's any kind of reversal signals in it. So you got this 30-minute here that's really, 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 really deep. So it is going down by 9.39. If that's down by more than 10%, we know that there's a pretty good rule to take there, which is 85% chance of an update in the next 2 trading sessions. So if you pay attention to that, the second day comes, you see some reversal signals, you can sometimes use that as a reason to take a trade. Not the best reason in the world. Tesla monthly was close to crossing. It could cross like tomorrow, honestly. It could break through. We'll see. We might have some consolidative moves. This is a very, very strong move. If we need to, that 30-minute can pull back for a day and then curl right back up into positive territory. It's only Tuesday, right? It's only Tuesday. So what we will look for, what we will be looking for is if we get that to pull back in any way. If we would have pulled back today, actually, if we would have hit this level and just started, kept dropping, keep dropping on this, and then we pull back to this area, and then we come up like this, we would be looking for that divergence, for that reversal signal, because this is really behaving like a bear market. Just a little bit. It really is, just a little bit. Now we got to get above that 20 reading for the volatility, but hey, that's cool. I hope it's working out for you. Is today Wednesday? Today is Wednesday, isn't it? Wait, what the? Am I losing my mind? That's not it. Oh my God, it's Wednesday. Oh God, it's probably because I didn't get that sleep last night. Bro, I'm running on about 3.5, 4 hours of sleep still. At least I went to the gym. That gave me some energy. Thank you guys for letting me know. It's okay. You guys forgive me. What do you think about the volume selling during the first and last hour of the day on the SPY? So for the most part, for the first and last hour of the SPY, the only things I really take into consideration are first 2 hours probably are the retail hours. So you got to watch out for that. And then by the last hour, you need to know that that's most likely when institutions and big players are actually joining. And the reason you can see that is because the volume, I think it is 35%. 35% of the volume that comes into the SPY is in the last hour of the day. So that's all I need to take into consideration. So if I really wanted to pay attention to things, the end of the day is going to be better for me to pay attention to the signals than the beginning of the day, right? Because I don't want to get trapped or something like that. So this actually, I want to say this could be a trap, but at the same time, I'm just not seeing that in the price action here. Now, this does move at night. If I see a crazy thing on the dollar and I am paying attention to it late at night, I do put it on Patreon. Boeing got a solid bounce. We're just seeing the market go down, or the market go up while the dollar goes down. Sorry, dollar down, market up. That is the correct correlation at this moment. Now, we did see it dip down for a moment, and the dollar is still down while the SPY is down a little bit from that high. So that would tell me there's still buying that could send us maybe up to like 556. Maybe we see that upward reaction, and then we get PMI. Remember, PMI comes out, I believe, at 30 minutes after the open. I'm going to double check that real quick. So tomorrow we get ISM manufacturing PMI at 30 minutes after open. And then before open, we will get initial jobless claims and things like that. So pay attention to it. Fed balance sheet comes out. And then on Friday, non-farm payrolls and unemployment before market open. Ooh. Interesting. All right, volatility, we'll see if you're able to pop up here. Maybe we're going to pull back right now. We'll see. PCC is pretty high. Dollar did wick up a little bit there, but I don't want to like micro pay attention to it. I just want to see the move after a while. Damn, Scott, I'm jelly. Super jealous. I need to get a new grill. IW, I'm gonna do 227 by Friday. I wouldn't necessarily say it has to at this point. It broke out almost like a fake out, right? It almost looks like a fake out to me. You want to see if this is a retest. So, I mean, maybe something you could do is like see if that 15-minute curls down, curls back up, and then you could see another positive move towards that 227. You could even head up towards 233 if these yields keep dropping. After hours can be a mix, but yes, that could be institutions after hours as well. But after hours can be a little bit of a mix. You'll just have lighter volume so you can see some decent moves. Well, that's mainly a volume thing, Onda, because less people are trading in the aftermarket right away. Like right at 301, less people will be trading. So you're going to see crazy moves. Yeah, that oil trade was great. The 4-hour divergence that led to that upside, damn, that was a cool trade. I really, really liked that one. I didn't take it, unfortunately, but I had my good trades today. I cannot complain about today. Today was a great day. I managed my position. I managed my risk before I even took the position yesterday. Then it prints for me today, and I'm happy about it. That's all I can be, you know? Can't hate. Let's go take a look at Bitcoin and see if that thing is dropping. Yeah, it's down 1% now. So as we look at these 2-hour charts, we'll see if that's able to roll down. Most likely coming to test a certain level down here of 63.8 or maybe down towards these wicks. But I'd say these closing bars, 63.5K. Now, the only thing we have to be aware of here is a 2-hour divergence if that is able to form. I'm tied for my best day ever. Hey, congratulations, Spicy. I like it. That's what I like to hear. Ethereum making the same reaction. Palantir kind of, you know, giving you some possible double bottoming down here. We'll see what happens with this going forward. Mainly just a higher low at this point for the 30-minute. Consolidating, right? Consolidating, breakdown once you break it. Consolidating. Is it going to break down again? We'll see if that's able to cross tomorrow. Earnings are coming up. Will you cover earnings? No, not necessarily. I am someone who truly believes in technicals and just staying away from earnings, because a lot of the time earnings, when you do your analysis on it, it's kind of like if they want to send the stock higher, they can use one piece out of 10 things you hear on an earnings call. They can use one piece and convince everyone, hey, the stock's going higher, and the stock goes higher. One piece, they could miss all the numbers, and one little thing can make the stock go higher. They can they can get all good numbers. They can say 10 good things, but they could say, oh, but our AI, we're having trouble with that profitability with AI. Boom, it goes down. So I'm not someone who wants to react to that all the time. It's just going to cause me more annoyance. It's going to cause me more stress. I would rather just stay away from it, wait and see the reaction and see what happens. Oh God, GME, why are you throwing up on us? No. We'll see if there's a divergence. The cool part about GME is if it makes a divergence here, that will be by a weekly expected move. We'll see now if AMC is able to drop here. It looks like AMC could be due for a pretty good drop. It really could. Because you got 30-minute divergences all across this. If I blow up this RSI, you can see how that's really been coming down since this point here. Still coming down, multiple point divergence here, flatness across. So you can see that, and it's down for that MACD. So pay attention if that's able to cross. That could be a signal that we're actually going to see further downside. We'll see. Which might not mean the best things for IWM and things like that. Volatility is starting to turn up here, crossing up on the 30 minutes, so we could get that pullback first thing in the morning. Or is this going to be a fake out? Ooh, that would be sketchy. Ooh, let's see if the dollar is proving this at this point. It kind of is. You're getting a tiny little wick up. We'll see. We more so want to see what the dollar looks like in the morning. This is why I mitigated all my risk. I just said I'm going to get out of everything, start at 0 tomorrow, and be solid. It is still holding it, Dustin, and yes, it is still holding it, but we just want to see if that's curling up. Mainly, what you'd want to see here, this is actually what you would want to see from some good market behavior. If you're actually going to head higher, you still might want to see this. You don't necessarily want to get overzealous to this area because you can invite a big drop. So if you did just a simple thing like going like that and then turning up, and maybe we'll see that in the aftermarket, right? We can see if the post-market does something like this, then we can create that structure. Right? So that's what I'm really paying attention to. I'll look at the signals once all of this actually plays out. I think I need a little bit more price action to see if this is going to be a pullback or a reversal. But at this point, I would say pullback. If it was going to reverse from here, just to have a bearish thing in mind, right? That's kind of a bullish thing. Bullish thing is at some point we make this structure. The bearish side of this is you built up a bunch of liquidity here. So if you flash down to this area and get some kind of bounce, you can grab liquidity the other direction. See something like this go on. So you have a bullish and bearish case, pretty much case at all times, and you just want to be aware of those and then react to which one's happening in front of you. GME 17. Okay, 17. Let's see where that bottom side move is. Where could this really hold up for GME? It looks like down towards about 2170. And right when everyone's really bearish on things. Ooh, okay, now we're starting to see AMC on the 30 minutes start to turn down. We'll see if that actually does confirm at the very end of today. We only got 5 minutes left. 2 hour can rotate down. That is close enough to negative territory to send you negative. So this could hit something like $5 if that wants to hold up, make that higher low. But this also can go negative. Just think, it's still pretty decently close, right? If that just crosses, ooh, negative territory. So you can come down a little bit deeper. And we'll pay attention to that as of tomorrow goes. Microsoft trying to see that bounce back, seeing that actually rip a little bit here. We'll see if that's actually able to confirm tomorrow. On the hourly, you're probably looking for that to confirm. You're looking for that just to get a little bit more strength at the end of the day here. Cool, cool. Cool, cool. Mara dropping, Bitcoin dropped, Mara dropped. It makes total sense there. Dollar still sitting at 0.42 negative. Let's see, SPY. Trying to just stay consolidating, I think. Trying to stay consolidating on this 15-minute. We'll see if it dips down a little bit lower. That would be nice. I actually would like that look. VIX pointing down. We'll see what happens with that. We'll see if this can rotate back down. But the 30-minute is trying to cross at this moment. which kind of leans me towards, hey, you know, a pullback going into the morning, and then we'll see what happens. Pullback in the stock market in the morning would be nice. But we'll see with the earnings. We'll see some initial reactions probably right after the close. 4 minutes left. Now, as far as today goes, guys, I did want to mention something because I was having lunch with, well, I didn't really get to have lunch, actually. I was a little bit busy, but I was sitting with my wife for about 30 minutes there, and she's just having a little bit of a rough day. So tonight I might not be putting out a YouTube video, but if I see things that look kind of important going into tomorrow, I will hop on and make a very brief one. Just so you're aware, tonight you might not get a YouTube video, but tomorrow you for sure will get one. We'll pay attention to those signals. Sorry to say it. I know it's just sometimes life happens and we got to hang out with family for a moment. So I wanted to treat her and make sure to hang out with her and the baby girl for a little bit as she's having a tough day. Slacker, yeah. Oh, man. Yeah, live twice a day in a video. It is tough. It is a little tough because I do other stuff as well. So, well, I can wait 2 minutes here. I can wait 2 minutes here. They're having some fun. She had some banana and oatmeal today. She's starting to eat food. Her little tooth is actually showing now, like fully. So she's got one tooth just sticking up. It's pretty hilarious. But thank you for telling me that, Bubblicious. So you guys know, you guys are all family men out there, family women out there. So I appreciate it. Solana crossed down on the daily chart. Not a good sign. Not a good sign. Really, Bitcoin could cross down on this daily chart in the after hours. Look at that. Look at that. That's not a good sign for Mara, guys. I'm just saying, like, Mara does follow Bitcoin pretty well. Now, earnings can maybe shake that up a little bit, but for the most part, it follows Bitcoin pretty well. Not saying, you know, that doesn't mean, by the way, when I say stuff like that, I'm never telling anyone, like, this is, oh, yeah, it's going to go down, so therefore Mara is going to go down. That's not it. It's still earnings. You have no idea. They could say one good thing, and that turns around while Bitcoin goes down. So I just want to be very clear about that. Something to pay attention to here, as there is a 30-minute divergence. You want to see if this 2-hour can confirm a downward move. We could see that as soon as tomorrow. We'll find out. SPY 30-minute here, just seeing a little bit of a... This could just even be just profit taking at this point. Profit taking at the end of the day. This is a big day. I'm sure your day traders are happy with this. Magnesium does help with sleep. Her abuela always gives me magnesium because I'm a terrible sleeper. I've always been a terrible sleeper. I think it's my ADHD. If I'm like really, really sleepy and then someone shows me a stock chart just for like 2 seconds, I immediately go, oh, I need to get on my computer and I need to look at stocks. It makes no sense. Starting at zero tomorrow too. See, bro, it's just something I like to do when things are a little bit uncertain. A little bit uncertain. Okay, who has earnings real quick that we can go look at? Who was it that had, oh God, I'm blanking. That's the 4 hours of sleep. Who had the earnings today? After hours? Someone let me know. I know I looked at a bunch of them. Crap. Why am I forgetting? Because tomorrow's a big day. I know tomorrow after hours. Is Meta's today? Is Meta today? It is today. We'll see what happens with this. All right, guys, let's just take it for what it is. I'm gonna go spend time with some family for the day, for the rest of my day. But I appreciate you guys being here. You guys have been here, you know, even in the morning and for the closing stream. So pay attention to Meta for me, and we'll talk about it tomorrow morning. All right, sound good? I hope you guys have a fantastic rest of your day. I'm gonna hop off just for a little bit. And well, not a little bit, actually. I'm not going to make that YouTube video tonight. I'm in my regular sync here. I got to get some good sleep tonight. So I will be live and ready for you guys tomorrow morning where we can talk about some stock market analysis. Very cool look, though, for Meta if this is going to head up, right? You see this, dip down, big handle, come up, consolidate before earnings. Rip to the upside would be nice. So a little edge to the bulls here. We'll see what happens with it going forward. Thank you guys for being here. Really appreciate it. Remember, if you want to learn anything that's going on here, just note that those courses are 90% off. They're down in the description. The $100 course is going to be great to learn what is going on in this market right now and how to trade around it. That one is going to really help you in a market like this one. So thank you guys so much. I hope you guys have a great rest of your night. And I look forward to seeing you tomorrow. All right? Peace. Good luck if you're playing meta earnings, man. Oh, ARM had it too. Let me look at that real quick. We didn't look at this. It was able to go positive, and it's not overbought. That's a good sign. See, ADHD kicks in, and I look at another chart. All right, guys, I'm heading out. You guys can watch ARM explode to the upside. See ya.